If we look at the sort of the way that the blockchain space is working, of course we all look at coin market cap and the market caps of these coins and look at that as a value, and a lot of people compare that to company value. Now, I mean, of course, when it comes to a traditional sort of startup, the way that the company is valued is through all sorts of means in terms of the value of the company. But now you have the value of a coin, which is separate to the value of the company. So how's that going to play out now over time?
We are at the very beginning of discovering new types of business models that are themselves decentralized. And the various projects and the way they deploy their applications and the fact that many of them or most of them are open source and developers can participate globally, and that the mobile phones spread them around in unexpected ways. These create an acceleration of this business model discovery. And part of the understanding that is starting to emerge is that in these new business models, rather than looking at the price list of something, rather than the salespeople that should be receiving bonuses for a quarterly result, etc., everybody's aligned, and everybody's interest is to make sure that the token value is supported or, if possible, increased. And this alignment of interest is creating a lot of beneficial effects. And so concentrating in what I call, rather than calling it a market cap, I call it the network value, concentrating on the network value of a decentralized application as represented by the sum of the liquid tokens unit value is I think interesting and useful. And it can very, very rapidly incorporate the knowledge that is spreading, a new version of the application being released, an important partnership that adds another few million users to the network, or a use case that is demonstrably valuable to millions of people who adopt the decentralized application as a consequence. This unavoidably is incorporated into the price of a token very, very rapidly, if not even in real time.
Okay, yeah, I see that. It seems like Justin may have fallen offline there. I'm not too sure why. I know he's in a hotel room, so potentially he's lost internet connection, but we'll just continue, and I'm sure he will be back.
Yeah, I'd like to come back to the previous question. I think I lost you just before.
Yes.
So I think that it's quite interesting. There's two different types of token. I'm sure that a lot of your viewers actually understand that there's the security token, which is generally linked to something, linked to the equity of the value of the company, or linked to gold or to the US dollar or whatever it is. And those are the ones that obviously the regulators are super concerned about. Then there's the utility token, which is gives you the benefit. I think the best example I heard was if you were to build a new railway company and you gave utility tokens away, you would fund the railway company, and the utility token would give you access to the train, that kind of thing. Yes. But the problem with the security, and I think we're going to face this issue a little bit with the Wealth E, is that if it is really, really an honest coin and it's based on fundamental value in the company, then it's less likely to grow at thousands of % a month. Whereas if you have a utility that you can leverage the crowd and build up an enormous amount of excitement about this thing, it might not necessarily have fundamental value behind it. And so your question was about the value of the companies that are sitting behind these coins. And I think that, it's very clear that a lot of these coins are being launched with nothing other than a white paper. And for those of you who don't know what that is, it's a prospectus. You don't have to have written a line of code. You can have a prospectus of 30 pages, and you can launch and you can raise yourself, as we have seen in the real estate space alone, $15 to $20 million based on that piece of paper. Now, for me, there's no fundamental value in that coin. I think, that was my point around the valuation of companies relative to the actual value of the product or service that or problem that they're trying to solve.
Yes, absolutely.